Well, good morning, Bob.
Good morning, Bill.
We're talking. Well, thank you. We were off last week. We were at the American Securitization Forum, the ASF conference, and we were in Las Vegas. Did you win any money?
I did, actually. I stopped at the airport. The only time I played the whole time. I stopped at the airport, sat down at the one of the machines, and
A slot machine?
slot machine, and won $60.
That's awesome. I didn't know. Had I known that, you could have bought dinner. One of our employees said, "I'm going to win." I said, "How are you going to win?" He said, "I'm just going to stand there and get free drinks and not gamble." So we're talking about some of the changes that have gone on in terms of securitization, and let's talk about some of those.
Well, we had, it was an interesting conference. There were a lot of people there. I mean, the conference attendance was way up. I think the attitude about securitization is improved a lot.
By the way, before we go any further, we got an award.
I know, most creative.
Most creative booth, absolutely. In fact, they went to the wrong conference, didn't they? We had a booth that was like, it was a doctor's office or emergency room or surgical suite.
Yeah, we fix things.
Exactly. We examine what you've got, give it a total examination, and we had a bed for people to lay on and everything.
Right, yeah.
Very few people got up on that bed.
Well, you know, it was kind of intimidating, I think.
Yes.
With you in a white coat.
Exactly. Us as doctors, right? Exactly. So, let's talk about some content now.
Well, you know, there were a number of speakers, number of regulators, officials out there. But, you know, the general consensus was that the securitization market has fully come back with auto, credit cards, and even commercial. Right? But residential is still, you know, still way behind. Although there's a lot of speculation that this year we're going to have more securitizers, not just Redwood and Credit Suisse, but quite a number of other large investment banks are going to securitize from residential.
Why do you think it's come back in other areas and not residential?
Well, residential was the cause of the downturn, and residential is still working through a lot of issues. The regulatory reforms on residential are not solidified yet. We had Thomas Curry, who's the controller of the currency, speak, and he was talking about the fact that a lot of the regulations are still going to be coming back. Also, Paredes, who's now is one of the commissioners for the SEC, is saying with Mary Jo White coming in that they think that they'll be moving forward continuously on getting the regulations formulated. So they think that the regulatory framework for residential securitization is going to start solidifying this year.
You think that's what it's going to take?
I do.
For this to come back? And so when we see it come back, okay, so let's talk about, since we had the Super Bowl yesterday, and we're in an odds-making sort of way. There was a safety, by the way. There was a bet even on whether there would be a safety in the game. I bet there was a bet on whether there would be a power outage.
Yeah. I didn't see those odds when I was
Anyway, having said that, how many securitizations this year?
You know,
residential mortgage securitizations.
I would be surprised if there were more than 24.
Okay, so the number's 12.
All right.
Okay, no,
That's
24. 24. 12 in Mississippi, exactly. 2 dozen. Okay, not 1 dozen. 2 dozen. Okay, all right. So 24. Most prognosticators think there's going to be somewhere in the vicinity of 15, 16. At least that seemed to be the consensus number.
Right.
20 on the high side. So that's consistent with what you're saying.
Yeah.
Why do you think that number's so low for this year?
Well, they're still struggling to understand what the regulations are going to be and what the impact's going to be. We had several regulators get up in front and talk about the fact that the GSEs need to be de-emphasized. They own the whole market right now, and they want to pull them back so that they're not such a totality of the market. The problem is the QM regulations that have just been put in give a significant advantage to the GSEs.
Well, so let's step back a moment and talk about that. One of the big initiatives that the SEC appears to have is a new data reporting standard.
Right.
There's a big discussion about the regulatory changes around reporting of mortgage data. Do you see the SEC moving in that direction?
Well, they clearly say they are, and the ASF announced that they're just going to back off of their standard and just give it to the SEC. Since the SEC says they're going to do it, the ASF, which had been very actively promulgating a standard for data for the whole mortgage, has announced at this conference that they're not going to do that anymore. They're going to back off of that and turn it over to the SEC. So yeah, I think the SEC, it feels like they have a mandate to do that and are going to move forward on that.
There are different data sets for the entire mortgage, whether it's a GSE mortgage or a non-GSE mortgage. There is the Uniform Loan Delivery data set for the GSEs and the MLPSA data set for the non-GSE mortgages. Right. So let's talk about that and how we see that moving and changing around this year and going forward, and why that's important to players.
Well, I mean, that's one of the big issues right now that's slowing everything down, is that people don't know where it's all going to fall out. GSEs, are moving forward. They're talking about having a standard data set that they're going to maintain both on the appraisals and on the mortgages. The Federal Reserve has talked about having a consolidated data set on the mortgages. The SEC is talking about having a data set on the mortgages. Where is it going to fall out? I mean, who's going to really own all of that? And how are the GSE loans are going to be different from the non-GSE loans? And then there's the qualified mortgage and the non-qualified mortgage, so...
Well, you have these origination standards, which we have been addressing.
Right.
There also appear to be a move to develop servicing standards. And that was that was underlying theme at the conference as well.
Right. There was a good bit of talk about the need for new servicing guidelines. And of course, by the time, the way the government moves, by the time that they get those standards in, servicing is going to be non-existent. It's collapsing pretty significantly.
Well, it's certainly default servicing.
Right, yeah.
We may have performing servicing, but default servicing...
But that's not where the issues are.
Exactly. Right. But the issues are on default servicing and having the information, because there are at least 3 sets of documents on every mortgage. There is the investor set, there is the servicer set, and there is the custodian set.
Right.
And sometimes...
They don't all look the same.
Actually, many times, they're all different. And so it's a real issue.
It is an issue. And,
It's sort of like the 3 symbols on the slot machine that I played. They all came up different.
Oh, really?
Yours obviously, at least one time, came up the same.
Yeah,
at least that's all you're admitting to.
It was a surprise, Well, as soon as it came up the same, I left.
Take the money and run.
That was it, So yeah, I mean, they're different, and there's no universal agency that's over all of this that could basically set some general standards. So what's going to happen is that there's going to be these different efforts to come up with standards. At some point, they'll get together, or one will just take precedence over the others.
Right.
But we don't know which that's going to be right now.
Exactly, and you may have some difference of opinion between FHFA and the SEC.
Right.
As we move through these standards, we do think it's going to come back.
Everybody universally felt that it's going to come back.
It'll be better in 13 than it was in 12, and better in 14 than it was in 13.
Right. Yeah. And I had a guy come up to me at the conference and said, I remember about 5 years ago when this all started happening, you said it was going to be like 12 or 13 before things started coming back. So you were right on. I said, I can't even remember.
Did he get up on the table?
No, I wish he had.
Do you have your lab coat on?
Brain exam.
Do you have your lab coat on? Well, we know there's going to be changes. This year better than last. Next year better than this year.
Absolutely.
And so, what do players in the industry need to do?
Watch what's going on and trying to adjust what the regulations end up being. We're going to expect the qualified residential mortgage guidelines coming out before too long. They should be out first half of this year. That's going to provide a little bit more precision about exactly what the regulations are. There's going to be a lot of discussion about what the qualified mortgage things or impact is going to be. That's going to start resolving itself. Like you were talking about, the data standard is going to
Do we get all the lawsuits behind us this year? All the lawsuits, the private lawsuits and that sort of thing? So. You think that's next year?
Yeah. I saw an article in the New York Times this morning.
Amazing.
they talked about the fact that the B of A settlement may be in jeopardy because evidently a lot of this servicing issues occurred after they acquired LandSafe, and so the judge may choose to void that settlement. So the lawsuits are going to keep going for a while, I'm afraid.
It's going to take getting those behind us to get rid of all of this overhang from default services.
That's correct.
So we're out of time. This is our first Monday back. We look forward to seeing you next Monday from our client conference in Scottsdale, Arizona.
1 hour later.
1 hour later. Hope you all have a fantastic week. This is FNC's Morning View. I'm Bill Rayburn, Bob Dorsey. Good day.